The US dollar stands as a pillar of the global financial system. Yet storm clouds gather on the horizon. Experts predict a potential decline in the dollar's value over the next decade. This projected depreciation stems from a confluence of factors. Economic indicators such as interest rates and inflation play a crucial role. The outcome of the 2024 US presidential election injects further uncertainty. Global trade tensions and rising US debt levels also weigh on the dollar's prospects. The greenback faces a challenging road ahead. The dollar's dominance is not easily toppled. It remains the world's primary reserve currency. Central banks hold significant reserves in US dollars. International trade often relies on the dollar for transactions. However, cracks are beginning to show. Alternative currencies and assets, such as cryptocurrencies, gain traction. The rise of digital currencies challenges the dollar's supremacy. Investors seek safe havens amidst economic uncertainty. The dollar's future hangs in the balance. Economic indicators provide valuable insights into the health of an economy. They offer clues about future trends. For the US dollar, these indicators paint a mixed picture. The Federal Reserve's monetary policy decisions exert a powerful influence. Interest rate hikes can strengthen the dollar, attracting foreign investment. However, excessive rate increases risk stifling economic growth. Inflation poses another threat. Rising prices erode purchasing power and diminish the value of the dollar. Global economic conditions also impact the dollar. A strong US economy typically bolsters the dollar's value. Conversely, a global slowdown can weaken demand for US goods and services. This, in turn, negatively affects the dollar. Trade balances play a role as well. A large trade deficit, where imports exceed exports, puts downward pressure on a currency. The US has long grappled with a substantial trade deficit. This imbalance contributes to the dollar's vulnerability. The cryptocurrency market has exploded in recent years. Bitcoin, the first and most well-known cryptocurrency, has captured headlines. However, the crypto landscape extends far beyond Bitcoin. Thousands of cryptocurrencies now exist, each with its own unique features and purpose. Proponents hail cryptocurrencies as a revolutionary technology. They point to the potential for faster, cheaper, and more secure transactions. Decentralization, a key aspect of cryptocurrencies, also appeals to many. Despite their promise, cryptocurrencies face significant challenges. Volatility remains a major concern. Cryptocurrency prices can fluctuate wildly, making them risky investments. Regulation poses another hurdle. Governments worldwide are grappling with how to regulate this nascent asset class. Lack of clarity creates uncertainty for investors and businesses operating in the crypto space. Moreover, environmental concerns surround some cryptocurrencies, particularly Bitcoin. The energy-intensive process of mining Bitcoin raises questions about its sustainability. Bitcoin has emerged as the poster child for the cryptocurrency revolution. Its limited supply and decentralized nature have led some to dub it digital gold. Proponents argue that Bitcoin offers a hedge against inflation and economic uncertainty. They point to its growing acceptance by institutional investors as evidence of its maturation. However, skeptics remain. They view Bitcoin as a speculative bubble, driven by hype rather than intrinsic value. The dramatic price swings reinforce this view. The future of Bitcoin remains uncertain. Will it fulfill its promise as a digital store of value and alternative currency, or will it succumb to regulatory pressure and market volatility? Only time will tell. Factors to watch include the pace of institutional adoption, the evolution of the regulatory landscape, and the development of competing cryptocurrencies. Bitcoin's journey is far from over. The US dollar and cryptocurrencies may seem like separate entities. However, their fates are intertwined. A weakening dollar could benefit cryptocurrencies. Investors seeking to protect their wealth from inflation may turn to Bitcoin and other cryptocurrencies as alternatives. Conversely, a strong dollar could dampen enthusiasm for cryptocurrencies. The relative attractiveness of these assets depends on various factors, including market sentiment, economic conditions, and regulatory developments. The Federal Reserve's monetary policy decisions have implications for both the dollar and cryptocurrencies. Loose monetary policy, characterized by low interest rates and quantitative easing, can weaken the dollar. This environment may benefit risk assets, including cryptocurrencies. Conversely, tight monetary policy, with higher interest rates and reduced liquidity, can strengthen the dollar. This scenario could put downward pressure on cryptocurrencies. The financial landscape is constantly evolving. The dollar and cryptocurrencies represent two prominent forces shaping this landscape. The dollar, while facing challenges, remains a dominant force. Cryptocurrencies, though still in their infancy, hold immense potential. Understanding the interplay between these assets is crucial for investors and policymakers alike. Navigating this complex terrain requires careful analysis, adaptability, and a long-term perspective. As we look ahead, several questions loom large. Will the dollar maintain its global reserve currency status? Will cryptocurrencies gain mainstream acceptance and fulfill their transformative potential? Will regulators strike the right balance between fostering innovation and protecting investors? The answers to these questions will shape the future of finance. The journey promises to be both exciting and uncertain.